The global financial system is fundamentally incentivized to support the wealthy minority over the lower income majority. Banks make money by lending out the funds that you deposit with them. The more cash you put in, the better you're treated. Your transactions take priority, your calls don't go to offshore reps, your fees get waived, your interest rates are higher, and a personal banker is assigned to monitor your finances. On the flip side, the less money in your account, the more fees you pay, and the further back in line you start from every time you want to do something with your money, all while getting the minimum in service and communication. Banks chase affluent accounts who can bring large balances and high cash flow. But it's not just banks. Every business across every industry aims to acquire as many high spenders, whales, and wealthy customers as possible. From the standpoint of acquisition and retention, it's better to have a few high-value loyal clients than it is to have lots of mid and low-value customers. Yet there are two companies, Western Union and MoneyGram, that have gone in the opposite direction in providing financial services to a population that banks deem to be too poor to be worth their time. When it comes to sending money, wiring is globally accepted, but it's also an opaque and complicated account-to-account transfer that can take weeks, suffers from poor visibility, and is error-prone. ACH, Cash App, Zelle, Venmo, PayPal, and Wise are all popular options these days due to their ease of use and low cost, but just like wires, they can only perform account-to-account transfers. Venmo, Zelle, Cash App, and ACH users in particular can only perform domestic transfers as these networks are only supported within the United States. PayPal and Wise win with broad international support, but like all the other solutions, can only handle account-to-account transfers. If you don't have a bank account, if you're sending cash, if the recipient doesn't have a bank account, if the recipient does have a bank account, but banking in their country is unreliable, or if the recipient needs funds immediately, then none of the aforementioned solutions are viable. Western Union and MoneyGram are two companies that have been uniquely facilitating immediate cash-to-cash transfers for decades. While most people have bank accounts these days, and world governments are united in their pursuit of surveilled, cashless societies, there still exists a population that needs cash-to-cash transfers and are left out of the financial system. This subset is primarily made up of migrant workers who work overseas and send part of their earnings back home. Migrant workers are an invisible yet essential backbone for every developed country: the US, UK, Germany, Singapore, Italy, Netherlands, Norway, and the UAE, just to name a few. Migrant workers prop up education, agriculture, food production, construction, logistics, healthcare, and more. Migrant workers and the poor are disregarded by banks for similar reasons. They often have too little money on hand, their employment situation is too volatile, they're paid from job to job, they work in areas that are too remote, they can't make it to a branch during business hours, they can't overcome the language and cultural barriers, they lack the proper documentation, or they only trust the cash in their pockets. In comparison with Western Union and MoneyGram, you can walk into one of their retail locations and send anywhere from $1 to $50,000 in cash to anyone in the world. Your designated recipient can walk into a Western Union in their country, bring with them their ID and 10-digit tracking number, and get that cash paid out into their hands within minutes. There are no banks, no applications, no complexity, or week-long holds. You can also convert cash at Western Union into money orders, which are prepaid checks. Unsurprisingly, it's also this transactional simplicity, fast pickups, and absence of conventional financial safeguards in Western Union's cash-to-cash transfers that has made the company the payment processor of choice for scammers and fraudsters. Yet this episode is not a retelling of the history of these companies, as you can read that on Wikipedia in a much more digestible and productive manner. In this episode, we'll cover the business of Western Union and MoneyGram, how they make money, how they drive economic growth in developing countries, and how the market is pushing their final evolution into a bank for the poor. Targeting the wealthy is a straightforward exercise. You can identify the high-income neighborhoods they live in, the posh areas they frequent, their hobbies, and even the cars that they drive. But how do you target a subset of the working population that's always on the move, has little disposable income, has little free time, is likely living paycheck to paycheck, and is largely disconnected from the mainstream media? To do that, Western Union and MoneyGram optimized for availability and convenience by having so many locations where anyone can stop by for financial services both during and outside of business hours. In the United States, Western Union's 60,000 locations is more than all of Wells Fargo, Chase, Citibank, Capital One, and BOA branches combined. Western Union's scale is even more impressive abroad, as their 60,000 US locations represent just 10% of all their total locations. There are twice as many Western Union locations in Africa than there are McDonald's and Subway combined in North America. With the exception of North Korea and Iran, money can be sent to any country in the world with Western Union. And as we've seen through 3 seasons of modern NBA, this kind of scale is only possible through a third-party arrangement like franchising or licensing. Western Union and MoneyGram rely on quote-unquote agents, people with pre-existing storefronts, cash handling systems, and point of sales to render their services. These agents consist of not only the large supermarkets like Kroger, the convenience chains like 7-Eleven, big box stores like Walmart, discount chains like Dollar General, but also small independent mom-and-pop retailers. Common examples of smaller agents are ethnic grocery stores, post offices, liquor stores, check cashers, gas stations, bodegas, notaries, insurance agencies, and even water stores. To these shop owners, becoming a Western Union or MoneyGram agent is a win. They add a supplemental revenue stream, they create organic cross-sell opportunities, and they drive more in-store traffic. Western Union benefits by tapping into the physical presence, credibility, and local connection that these stores have in their communities. Since many of these businesses, like liquor stores and bodegas, are already open at night, on weekends, and outside of traditional banking hours, this model ensures around-the-clock widespread availability for customers. The agent approach is a light capital, light asset, and light touch model where the day-to-day customer service and cash is literally handled by third parties with no fixed costs. Scaling through agents brings zero risk to Western Union and MoneyGram in the traditional aspects of land and labor. Culture and language, which differ from country to country and even neighborhood to neighborhood, are major obstacles in traditional business expansion that are abstracted away under the agent model. Since agents are not relying on Western Union or MoneyGram for primary income, there's less concern about saturation. There's also less risk of fraud or theft by having these middlemen in cash-to-cash transactions, as local businesses generally have a reputation to maintain with their customers and in their communities. As long as offering Western Union or MoneyGram services brings in more dollars, no matter how small or irregular, that's better than nothing at all, as retail businesses are generally saddled with high fixed overhead costs. Western Union and MoneyGram, at their core, are networks with hundreds of thousands of interconnected physical locations around the world. These companies provide each agent with access to their centralized settlement engine and training on how to originate and pay money transfers. To take a page out of computer science and distributed systems, if we say each location is a node on a network, every additional agent is a node added to the network. The more paths or connections that can be drawn between any two given nodes, the stronger the network becomes, with Western Union and MoneyGram sitting in the center, distributing work out for each agent to complete as needed. Each money transfer is a rigid one-way transaction with one sender, one receiver, and one amount that involves two agents. Western Union and MoneyGram are the centralized leader nodes in this network, as their global settlement engines ensure the accuracy and accountability of each transaction and every dollar that is collected by one agent and paid out by another. These engines tell the agent interacting with the sender the fees and conversion rate, and later instructs the agent that's interacting with the recipient how much to pay out. Hence, onboarding as many retailers, both big and small, as agents in as many places around the world as possible is key to Western Union and MoneyGram's business. The same way that corridors are passageways that connect parts of a building, a corridor in the world of money transfer refers to payments sent between individuals of one specific country to those in another. The popularity of any given corridor is based on the ease of immigration between the two countries, the maturity of the diaspora, and the strength of the sending country's economy relative to that of the receiving country's economy. Some agents will naturally facilitate more senders, whereas others will service more receivers simply based on the country they're located in. Sender markets are developed countries that have a shortage of laborers and offer high wages, like the UK, the US, Germany, Italy, Singapore, the Netherlands, and the UAE. Conversely, the Philippines, Romania, Poland, Mexico, India, Pakistan, and Bangladesh are receiver markets where many immigrants and migrant workers originate from. Given that the Indian diaspora is the largest in the world, it should be no surprise that India is the world's largest receiver market as a recipient of over $87 billion in consumer to consumer transfers every year. If we go back to our metaphor of a network with agents as nodes, this means that specific connections or paths within the network are more popular than others. While India is the largest global recipient, the US to Mexico pathway is the biggest corridor in the world by volume, where over $50 billion is sent down south every year. Texas, Florida, and California are states with the most Western Union and MoneyGram locations and also have the highest agricultural production, manufacturing output, and population of Hispanic Americans in the nation. Corridors exist for every country, like the UK to India and Pakistan, Germany to Turkey and Romania, France to Algeria and Morocco, Italy to Poland, India to Bangladesh, and Hong Kong to China. The more money sent between one country to the other, the more popular those paths are, the more competitive those corridors become, and the more options that are available to customers when it comes to transferring money. The less popular a corridor is, the less used that path is. For instance, let's say sending money from Afghanistan to Taiwan, the less options there are for customers and the greater premiums Western Union can charge as one of the few networks to support such a transfer. Western Union's moat is not only its massive retail network and support for cash-to-cash transfers, but also having the compliance, regulatory approval, and brand recognition in just about every single country in the world. Moving to a new country, whether temporarily or permanently, is a stressful experience. Since most senders first start out in receiver countries, Western Union engages with migrant workers before they depart to drive awareness, to build trust, and to keep the brand top of mind. The company has long-running partnerships with world governments. For example, every Filipino that leaves the Philippines for work abroad must go through the Overseas Employment Office, who hands them not only their visas and work permits, but also a pamphlet from Western Union. When migrants and immigrants move overseas, they tend to live in areas that speak their language and are the most culturally familiar. Western Union closely tracks the movement of all migrant populations and diasporas, big and small, from the ingrained North African neighborhoods in Paris to the fast-growing Jamaican community in Philadelphia and to the emerging Haitian population in Indianapolis. Quote, you have to go country by country, banking system by banking system. We have direct connections, so for example, over 90% of the payments we send to India today are in real time. That doesn't just automatically happen. Some clever young man or woman in Silicon Valley doesn't wake up and say, I'm going to send money to India in real time, that will be easy. From the outside, it's hard to understand the breadth that it takes to send money in a highly compliant way to over 200 countries and territories. If you want to send money to Afghanistan, I'm your guy. If you want to send money out of Gabon or the Republic of Congo, I'm your guy. If you want to send money to Ukraine, I'm your guy. You can talk about people who send money to Mexico. These days, anyone can send money to Mexico. Each country has a unique regulatory framework for how you act as a quasi-bank or store of value. Every customer set has a different set of competitors, whether they be local banks or fintechs. You have to create a brand, you have to create trust with customers, and all of that is not easy. We have built this trust with 150 million customers in 200 countries, and it's their hard-earned money. Sometimes half or 60% of their monthly salary goes back to support people, and they give their hard-earned money to a trusted company like Western Union. You have to build trust for many years. It's very tough to scale and hard to replicate. MoneyGram and Western Union make their money through transaction fees and exchange rate margins, which vary based on the corridor and the amount. To incentivize shop owners to become agents and to execute money transfers honestly, MoneyGram and Western Union operate on commission. The agent that processes the sender and the agent that pays out to the receiver both earn a percentage of every transaction that they're involved in. Just like how banks make money loaning out deposits, MoneyGram and Western Union do the same with unsettled transfers. For transfers where the recipient has not yet picked up the funds, or for prepaid money orders that have not yet been cashed, both companies invest the outstanding amounts in short-term, highly rated corporate and municipal bonds. Once the transfers are eventually settled, the company liquidates these investments to satisfy obligations, but not before pocketing whatever net gains were made, holding on to that cash. Western Union's revenue is split across three business lines: consumer to consumer, consumer to business, and then bill payment and money orders. Consumer-to-consumer transfers are what Western Union is most well known for and their largest revenue stream. The other business lines are simply too small to analyze. Consumer-to-business transfers, bill payments, and money orders have accounted for less than a quarter of Western Union's total revenue for over a decade. Revenue from the consumer-to-consumer business is earned from the transaction fees and exchange rate margins charged to senders on each transfer. Consumer-to-consumer revenue grew from $3.7 billion in 2006, peaked at $4.5 billion in 2012, and has since been on a gradual decline with $3.9 billion in 2022. The regression in consumer-to-consumer revenue in the 2010s can be best explained by the greater pressures from intensified competition. PayPal had just hit international momentum in that time frame, and the emergence of Wise and Venmo, both of which were founded in the early 2010s, brought to market lower-cost alternatives for international money transfers. While migrant workers could not access these services as they were generally on the outside of both the banking system and smartphone adoption, what PayPal, Wise, and Venmo did was to take away the greater, higher lifetime value account-to-account business. Stronger competition meant that Western Union could not charge the same high rates as it did in the 2000s when it was one of the only two players in town. Western Union lowered its transaction fees but increased exchange rate margins to offset. Across all three business lines, revenue from foreign exchange margin increased from $654 million in 2006 to $1.49 billion by 2016, while revenue from transaction fees dipped from $4.2 billion in 2008 to $3.8 billion in 2016. But the decrease in one lever and the increase in another hasn't stopped the bleeding in Western Union's overall revenue. By all key performance metrics, the company should be doing better, as overall cash volume and total transactions have been on an upwards trajectory year over year. In 2006, Western Union processed 150 million consumer-to-consumer transfers. 10 years later, the company had reached 268 million transfers, and 5 years after that, an all-time high in 2021 with over 300 million transfers in a single year. Money transferred through Western Union, whether it was in the form of cash-to-cash, cash-to-account, or account-to-account, increased in tandem. Western Union went from transferring $53 billion of cash from consumers to consumers in 2006 to $80 billion by 2016 and $96 billion in 2020. Retail expansion continued as Western Union opted for scale to keep transactions flowing, maturing from 300,000 to 550,000 agent locations in 10 years. Since agent commission is a function of transaction volume and transfer amount, total payout to agents by extension has also increased. Of the $4.5 billion in company revenue across all three business lines, roughly 35% or $1.4 billion of those gross earnings were paid out to agents around the world as commission in 2006. While third-party commissions has remained consistent as 35% of overall revenue, the money paid out to agents from a dollar standpoint has been on a gradual decline for the past 6 years. In the 2000s, the average Western Union customer was sending nearly $400 per transfer. By the 2010s, the average amount of money transferred dipped below $300. In 2006, Western Union charged on average 7%, or $25.03 of fees and exchange rate margins on every consumer-to-consumer transfer. Of the 7% charged to the sender and pocketed by Western Union as revenue, the company gave out 3%, or $9.72, to the agents involved in the transaction as commission. Western Union took the remaining $15.31 as gross profit. $15 on every transfer might not seem like a lot of money, but if we remember that there were 150 million transfers in 2006, that's 400,000 transactions every day, 365 days a year. Western Union's pricing power has gone down as the $25 that the company used to charge on average per transfer decreased to $20 in the 2010s and is now below $15 in the 2020s. To maintain margins while lowering fees to remain in line with competition, Western Union has gradually paid less commission to its agents over time. Agents nowadays get 2% of every transfer and have earned less off each transfer as the average transfer amount has also decreased. Senders these days are being charged 4% on average through Western Union, but exchange rates remain marginally unfavorable, and the fees are not capped at a specific dollar amount like they are with PayPal and Wise. Despite the regression in top line and the increase in competition, Western Union remains a strong cash business with double-digit operating and net margins. Even with reduced pricing power, the company still provides a valuable service for an overlooked population with a need for immediate cash-to-cash transfers. Yet the most glaring item in Western Union's financials is the company's staggering amount of debt. For 2 decades, the company's leaders couldn't figure out a proper growth story that wasn't flash-in-the-pan press releases and big-name partnerships. Their only strategy was to charge senders as much as possible on every transfer. As long as the number of transactions were going up, the volume of cash being transferred wasn't dropping, to Western Union, life was good. Unsurprisingly, these same leaders took the uninspiring route of stock buybacks. Since 2006, Western Union has spent on average $575 million every year for the past 16 years, for a total of $9.2 billion spent on stock buybacks, and all of this has been with borrowed money. The company could have easily spent some of its operating cash to fund these buybacks, but doing so would have gone against the whole premise of juicing numbers for Wall Street. While Western Union's historical actions paint a picture of a dying fossil of a business, its new CEO is spearheading change to repair the mistakes of his predecessors and to do more for customers. Under Devin McGranahan, Western Union is now using words it's never used before in its 170 years of existence, words like lifetime value, retention, and customer orientation. In the past, the company was so focused on just maximizing revenue per transfer that it never bothered with the basics like tracking customers, monitoring their frequency, watching for churn, and understanding their behavior. It was only last year in 2022 that the company has started reporting on its customer base. With newfound emphasis on analytics, the company has discovered that every year, over 50% of customers leave Western Union. 30% of this churn was unavoidable, as this group of customers only needed to transfer this money once to fill a short-term emergency need. But the other 20% of this 50% annual churn are customers who settle down, who move into the financial system, who open up bank accounts, who move to digital, and no longer need to deal exclusively in cash. Western Union was just a stepping stone for these individuals, and since there were always new migrant workers coming in, this historically had not been of any concern to the short-term thinking of past leadership. Under Devin, Western Union is transforming from just retail cash-to-cash transfers and into a modern hybrid digital solution that aims to provide all the financial services that migrants would need even as they move into the financial system. Quote, "My customers don't have an HSBC account. HSBC won't even talk to them. My customers are migrants. My customers sometimes have documentation issues. They have low balances. They're only looking for a transaction account to be able to buy groceries, to buy subway tickets, so my customer is not one that I have to take away from HSBC or Citi or Chase. My customer is happy that somebody is willing to offer them a bank account, to put a card in their hands, and to be a part of a financial system that they're normally excluded from. Nobody is trying to bank my customer. One of the most basic financial needs today is to pay digitally at a point of sale or to purchase goods online. Yet when you arrive in a new country, you face financial hardships, and none of this is immediately available to you. A Western Union debit card linked with our mobile wallet will open doors to our customers in ways that many of us take for granted. Cross-border transfers, domestic peer-to-peer transfers, and bill pay services are core products of Western Union today. By providing a suite of digital banking services, Western Union can afford to think bigger and longer. Under the historical cash-to-cash play, the company could only monetize the sender once, which encouraged the company to take such a big slice on these one-time big transactions. Under a wider lens of enabling everyday small transactions and taking a tiny slice on that volume across both countries in any given corridor would allow Western Union to monetize both senders and receivers in a less aggressive and intrusive manner. Yet in the developing world, cash is still king. Western Union's future success fundamentally hinges on whether or not it can convince its customers to trust what they see in their phones and not just what they have in their hands. The company has run experiments in Poland and Romania this year to evangelize online banking by offering an extra $10 to receivers who choose to receive their funds in a digital Western Union wallet rather than getting it paid out in cash at a retail location. Senders who deposit their funds in their Western Union digital wallet can freely convert that money at any time into a currency of their choice whenever the rate is most favorable, and they no longer have to settle for the conversion rate that's available at the time of transfer like before. Devon's vision is that senders and receivers in their respective countries could potentially be rewarded for their engagement over time with special loan offers and even accrued interest on their digital funds. This North Star could turn Western Union from just a legacy cash to cash money transfer service and into a trusted bank for developing countries where the infrastructure and political system has not been able to deliver a better alternative to its citizens. In business, when companies decide what kind of customers they go after, they're also making a conscious decision on who they don't want. It's an easy but lazy narrative to stereotype Western Union as a predatory legacy company that's exploiting the poor, when in reality, the company is just filling in the demand from people that have been intentionally excluded from the financial system. From another angle, Western Union is a fascinating example of a business where the public markets are actually working as intended. That $9 billion in debt-fueled stock buybacks hasn't fooled anyone in over a decade. Instead, it's the continued insatiable investor pressure for meaningful material growth that has pushed Western Union to focus less on profit squeezing and more on long-term value creation for a population that no one else, at least not in finance and banking, is thinking about.